Thanks for joining us. I'm Marlin Bohling with you as we watch our opening trades here on our grain and livestock market activity. And here to join us live on the set, we have Chris Swift with us. Chris happens to be with Swift Trading Incorporated here in Nashville. Thanks for coming in once again.
Good morning, Marlin.
Happy Monday to you.
Thank you, sir. Same
Got
to
all
you.
your Christmas shopping done?
Not quite.
That's an evil question, isn't it?
It really is. It's a
This
trick
time of year.
question.
All right. I want to talk with you about what's going on in the grain trade. Pretty
Okay.
soft overnight.
Again.
Saw a lot of negative signs. Corn, soybeans, wheat, and cotton, I believe. They were all lower overnight. We do have some new pre-report estimates for the report coming out tomorrow. We can take a look at them if you want.
Sure.
This is for the U.S. Supply and demand numbers that are coming out. And on the U.S. ending stocks, the average trade guess for corn comes out around 2.48 billion bushels in a range of 2.36 to 2.52. Soybeans are expected to be around 445 million. And wheat at 941 million. Those are the average trade guesses. On the world ending stocks, we have a couple of sets of numbers, one for the old crop, and they pegged the corn worldwide at 226.4 million metric tons, soybeans at 96.3, and the wheat at 255.8 million tons. And then on the new crop, or the current marketing year, I should say, 2017 and 18, the corn is expected to have ending stocks of 202.7 million metric tons, soybeans 97.8, and the wheat at 266.3. Before we look at our prices, do you think this December report, Chris, tends to have much of a market effect or not?
I don't think so. I think that since you already had a majority of the crop harvested by November, you had the numbers pretty solid then. The bean numbers could change a little bit because they were the last ones to finish up the harvest on it. Corn numbers pretty solid, though, looks like.
Sounds like maybe analysts that I've been speaking with, they expect if there's going to be a change, it might be in maybe usage or exports or something.
Could be. And I noticed that our dollar is starting to weaken again just a little bit. Okay. So that could help to promote a little bit more export sales out there. All
right. Well, let's go ahead and take a look at our current prices, and let's go ahead and take a look at that dollar and then the corn and soybeans and the wheat. So we'll get you updated here on current prices. First up, the dollar index. Chris was just talking about a little weakness there, and we have December futures about 70 points weaker at 93.800. March down 120 points now at 93.390. And if you look at the corn, here we go with our grain prices here, down 3 1/4 cents on the March at 349.5. That's on the low of the day so far. On the soybean trade right now, we have that January down 3 1/4 at 986.5, and you have March down 3 1/2 at 998. So it's back under $10 again. And if you look at the wheat trade in Chicago, first of all, we have March down 6 at 413, only one tick from its low of the day. Well, it seems like a broken record these days, Chris. Kansas City wheat on the March, we now have that contract trading at 413. That is down 5 and only one tick from its low of the day. And again, I'll point out these have been making new contract lows like every day here recently. Minneapolis wheat, we have the March contract there actually unchanged at 611 1/4. And the cotton, we'll make sure we cover that. We have the March down 42 points at 73.30 cents per pound. On the wheat, Chris, what's it going to take to snap the wheat out of it?
I don't know, because it looks like with all the dry weather that is encroaching in the plains area and some of the Kansas areas that are not very good in their wheat, it's very surprising, and I think it just shows how burdensome the glut the supplies are right now.
Yeah, even with news like that, it's not able to
that would have been
market.
really friendly market-moving news had we not had so much glut there. But I think wheat farmers just have a tremendous amount of inventory still to move, and any uptick that they get in it, they see that as a place to move wheat.
And it's been making new contract lows for quite some time now.
Correct.
We're hovering near it anyway. All right, we're going to come back here in just a moment. We'll talk more with Chris Swift about our livestock trade. We'll see how things are opening up and maintaining prices right now when we come back. And we're back with Chris Swift of Swift Trading in Nashville, and we are talking about our livestock trade now. And livestock, Chris, had kind of a weak close last week here on the cattle trade especially here. How concerning is that to you?
It's not too awful bad. The cash market continues to be very firm. We continue to see movement at an elevated level, so we're clearly pushing the beef out. Seems like the futures market's got spooked with a little bit of fund liquidation that we've noticed in there, and the buying power is just kind of stepped to the sidelines for the time being and left the futures markets to kind of follow around just a little bit. But the cash market still looks in very good shape.
I wanted to pull up a chart on the feeder cattle market here, and a lot of technicians that I've been speaking with over the past week or so said that it looked definitely like a head and shoulders top on there, and we're showing it right now for our viewers at home. Do you agree with that concept of a head and shoulders on there?
Absolutely.
And would that project more downward pressure yet?
It very easily could, and a lot of it will depend on how much further they pull the basis away. Right now, they've got a very strong positive basis, and it'll have to snap back at some point in time as we move futures closer to expiration. But right now, that could lend a lot of support that the cash market is not falling, and it could abbreviate that head and shoulders a little bit more than what you might normally anticipate.
Is that a more pronounced chart than on the live cattle, do you think?
They're about the same. Clearly, it's a little bit better on the feeder cattle than it is the fat cattle market, but they're about the same.
Okay, so let's take a look at our prices and go right to the board on live cattle here. We'll see where we're now trading. And right now you have your February contract trading just a dime lower. That's about how we opened, Chris, if I recall. It's at 118.20 per hundredweight. And now we have that April contract in there at 120 even per hundredweight, and that is now down about 20 cents in value. The June also down 20 right now. And if we roll over and take a look at the feeder cattle market, here we have the January 32 lower at 144.90 per hundredweight, and you have the March contract down 27. It's at 143.05. Meanwhile, we have that April contract down 23 at 143.42. We were pointing out in the last half hour the fact that the beef cutout values really surged ahead, especially on the lower price select cuts on Friday, didn't they?
Yeah, they did. And now with the rib pretty much over with for the Christmas season, they'll begin to focus on the rest of the carcass and try to bring some value back to it for the rest of the year.
Interesting. Okay, let's look at the lean hog trade and go to the futures board. So right now, a little mixed. We have December up 32 at 64 bucks even, but we have February down 53 cents at 68.32. That's about 80 cents off our earlier high this morning, and April down 40 at 72.72. Where do we stand technically on this hog trade, do you think?
Sideways. It's been a lot of sideways trading in the hog market, and looks like probably going to continue to trade sideways until we get into the first of the year. Large first quarter production is anticipated again for the pork market.
Do you think the chart is mirroring the cattle or trading totally independently right now?
I think they're independent of it right now. Those two are moving in two different directions right now, and hogs really soft, and cattle had been firm for a long period of time. Most of this year it had been firm, and so just over the last month have the cattle taken a really big hit, and hogs have done a lot of volatile trading.
And the pork cutout values last Friday afternoon were kind of all over the place.
They were.
Mainly firmer, but the belly market actually backed up a little bit,
Yes,
didn't
it did.
Yeah. So that'll bear watching, I guess. Well, Chris, thanks for joining us.
Absolutely,
again.
Marlin.
I appreciate
Thank
it
you
very much. Chris Swift happens to be with Swift Trading Incorporated in Nashville. Janet, we have everything trading, and it looks like everything, doesn't matter if you're talking grain or livestock, everything a little weaker to start out the day. Big report tomorrow.
Monday has in store. Maybe they'll sit quiet as they wait for that report.
Yeah, right.
Thank you very much, Marlin.